Today, what's the future for the real estate industry? Hello again, I'm Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property with a distinctively Australian flavour. And today I have our property insider with us, Edwin Almeida. Hello.
How are you?
One really interesting question is, with all of the down momentum in the property market, how are real estate agents reacting?
With a very sombre mood. There's approximately 8,500 corporation licences in New South Wales. So that more or less would give you, say, 7,000 real estate offices across New South Wales, a lot of agents working independently or working from home. But I figured that would be about 7,000 actual or physical offices that you would see, your viewers would see. I think with this downward trend in property, or the more to the point, with the extended days on market in order to achieve a sale, and understanding that the majority of real estate agents are paid on a successful sale. And we won't go into detail the mechanics of that, but so we're going to get paid on a successful sale and on settlement. So it's we're not only tracking anywhere between 75 days to, in some cases, 150 days now on market, but taking those numbers into consideration, then add another 42 days for settlement.
Yep.
And that's a period of time in which agents or agencies, the corporations are getting paid. So that's putting a lot of stress in our field, in our industry, and agencies are starting to give notices to a number of the sales teams, the sales force. So you can imagine, Martin, what's going to happen if 20, 30, 40, even 50% of the sales force, which is approximately 27,000 real estate agents, go to join the dole queue or trying to find other form of income. That's what's going to happen in our industry. And I see this, again, evolving very, very rapidly. I touched on this topic about 18 months ago, and I said that this was going to be a real trend. And we're now, a lot of agencies are facing it. A lot of agents that I know of through different means and sources, like yourself, they are on borrowed time. When I say borrowed time, they're using credit cards to keep the businesses afloat. And another trend that's been occurring for your interest and your viewers' interest is the fact that there's been an increase in penalty or infringement notices given by Fair Trade New South Wales to the corporations and real estate agents, and a lot of them are around misconduct by basically misusing other people's money or trust account fraud.
Right.
So when that, you can see how it's all going to play out. There's a lot of pressure. And unfortunately, and I say unfortunately because it's a sad time that we're moving into in this regard, and I feel a lot of stronger measures need to be put in place. And that is, in the last 6 months, if you go to the OFT website, you'll see the infringement notices. There have been 5 custodial sentences given to 5 different agents. And approximately 11 or 13, did a quick count, 11 or 13 termination of licenses altogether, apart from your 2-year suspensions and 5-year suspensions. So it's just this is what's happening in our industry. Obviously, the agencies that are looking after rental properties are perhaps going to survive a lot longer, and that's if it's well maintained.
So do you think we're going to see offices closing? Do you think we're going to see consolidation of agencies into, coming together, or how's it going to play out, do you think?
Yeah, I think we're already seeing offices closing down. We're already seeing what I'm seeing, and a number of my colleagues that, because we're also licensed business brokers, and when we discuss different things about what's happening in the industry, we're already seeing a shift from your mainstream agencies, your mainstream franchise groups, going and moving into an independent body, or becoming more independent, because to avoid obviously those franchise fees and those cuts that the franchise groups skim off the top. I feel we're going to see a lot. The trend's going to move more towards being independent and be doing more freelancing. I think the technology's here. We've got all the technology to be able to do that more. Purple Bricks have shown that. A good model for vendors, but unfortunately not executed the way it should have been executed by the management. Another topic for another day. But that's what we're going to see, and I'm going to call that in approximately 3 years. Domain and REA are going to work along the lines of the Purple Bricks model, if I could use that term, right. And that is using real estate agents more as consultants. The marketing income that REA and Domain obtain on an annual basis from all our advertising on there is approximately $2.4 billion across Australia. The commission income that's obtained by the agencies across Australia is $15 billion. So they're saying to themselves, well, you know what? They're using our portals. The buyers use our portals. The agencies use the portals. Why are we only getting 2.4 billion when they're getting 15 billion and they're using us? So I think that's going to be turned around, and we're going to be working more as consultants for whether it be Domain, whether it be REA, or any other group. We're more. That's where the sales, but a good 30-40% are going to drop off the industry altogether.
Right. So a smaller industry, a differently structured industry, an industry that perhaps is more reliant on technology, because technology is moving along.
Yes.
And presumably also having to right-size itself for lower transaction volumes over the next 2 or 3 years.
That's correct, and focusing more on the rental side of things as well.
Right.
And I think the agencies and the real estate agents, the independent, that take on technology to better look after the other people's investments and give them a better service by adopting front end technology as well as back end technology. I think they're going to benefit greatly, because look, unfortunately, it's going to mean that they're going to have less property managers on staff, less salespeople on staff. But it's a progression. That's what technology is doing in many arenas. So when across the board you've got about 53,000 license holders and certificate holders in our industry in New South Wales, and let's say 50% a cut from that, it's a big, all sorts of questions start to come to being. But I think, look, it's going to be good in a lot of ways, sad in others, but that's the natural progression.
But you're calling the boom time is past, right, for the real estate industry?
Very much so.
Right.
Yeah, very much so. And I think that the same is going to be true for the car industry and any other industry that's relied on the or so-called fictitious equity or paper values that are being drawn down from property. I think the two sectors that are going to struggle. So we're going to see a lot of vacant shops, but hopefully the ones that do so, we start looking more into technology and more into resources that are going to help us to give individuals a better service.
Edwin, thank you very much. Very interesting.
Thank you.
Thank you. So there you go. The real estate industry is likely to get transformed and changed as a result of the changes in the broader property sector. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you.